What's going on, everybody? Welcome to a new video. In this video, I'm gonna break down this morning's trade setup, which you can clearly see, which made me a little over, almost $1,500 this morning. This was a opening range breakout trade, and you can clearly see the executions right here. This is where I was able to short my position at these exact highs, and this is where I was able to basically buy my position back at this exact low. I was able to predict the market was going to go lower. I was able to create a day buys with the team, and I was able to get a really nice entry up above these highs and buy at these exact lows before the market did reverse. So in this video, I'm gonna break down everything of how I created the day buys, how I was able to predict the markets, how I was able to catch this entry, and how I was able to get the perfect exit. And you can clearly see this is my Instagram. If you're not following me on Instagram already, make sure you are. That's where I post all my trade breakdowns and everything like that. So we've been on a win streak here for the last couple of weeks, and this month alone, we only had like one red day, which was only like $200, which is like break even, which is, it's not really nothing, but still we've been doing pretty solid for this month of December. And yeah, I'm gonna break down this exact trade setup and everything like that, as well as if you guys do want access to this trade journal. It basically covers everything when it comes to keeping track of all your trades, keeping track of your routine right here, from pre-market routine to forecasting to end of week reviews, as well as all the different, chart breakdowns and, back testing, helping you become better and keeping track of that data and helping you improve, as well as helping you improve when it comes to psychology and how to overcome psychology. So if you guys want access to the journal that I built out and created, it's going to be a second link in the description. If you want, one-on-one coaching or, just group coaching to help you become a consistently powerful trader. So let's say you watch till the end of this video, you got a lot of value and you want to trade live with me every single morning, and you want to learn exactly from me, as well as coaching calls, everything like that, to help you become consistent within the next 3 to 6 or 12 months, then click the first in the description and apply to join the Spark Trading University. Right, this is the university that I've built when it comes to helping traders become consistent, understanding trading from strategy, technicals, as well as other things like risk management, psychology. And I'm always with my students, as well as if you guys want trade funded accounts, everything like that, that's going to be in the description. So check out the description, and yeah, let's get to the video. So bam, trade breakdown. So this is just before 9:30 opens up. Let's create our daily buys, or what we're looking for the day, and how we're able to basically anticipate lower prices. So I'm gonna refresh my screen here of everything, and we're gonna break this down step by step by step. So first things first, let's go on the daily time frame. So on the day time frame here, not really much to really lean off of. Only thing I'm really gonna take note of on a daily basis is the previous daily high, as well as the previous daily low, as well as some potential areas of maybe support and resistance. So something I took note of this morning with the team was this gap right here. So as you can see right here, there was no trade within this area, so price does create a gap within this level. So I was anticipating higher prices could kind of reach back up into that gap level right there. And that was really about it on the daily time frame. So let's go down to a 4 hours time frame. So during the 4 hours time frame, before kind of like the market opens up, we kind of had a couple of insights and information. So we can clearly see here that we did this does look pretty chopped for sure, but on the 4 hour time frame, we did see that we did sweep out this previous low right here. So this was the previous day low right there. You can clearly see this is the daily candlesticks. We can clearly see that price did come lower. They take out those previous day lows, and then from taking out those previous day lows, we did see this push to the upside. Other than that, not really much information. We do have kind of like these equal lows below us, and then above us, not very much. So nothing much on the 4 hour time frames. So when it comes to these higher time frames, we're simply just marking out levels of liquidity, levels of support and resistance. So nothing really much on the 4 hour time frames, other than we took out the previous daily lows and we have previous daily highs above us. That's pretty much it. So now let's go down to the 1 hour time frame. 1 hour time frame is when things get a lot better. So on the 1 hour time frame here, we want to take note of levels of support and resistance and levels of liquidity. So a level of liquidity I took note of was this Asia low right here. So I'm gonna take note of right here. Asia is between 8 p.m. to 12 a.m. EST. So that was the Asia session high and the Asia session low. as well as some fair value gaps. We can take note of this fair value gap up here, right? This is a bearish fair value gap. Separation between this candle's low and this candle's high creates, that bearish fair value gap. We did also mark out this fair value gap above it right here as well as we do have a gap up here as well. So I did also take note of this gap as well. So these are levels of resistance above us, right? Whenever you're trading within the markets, you want to understand where you are within the range. If you're in levels of resistance, you don't buy up here, right? You don't buy within resistance. What you do is you wait for price to potentially break above resistance, pull back within it, potentially hold within that resistance, now turn support to then break higher. As long as price is within these resistance level and you can see that price is struggling to break through it, you don't buy up here, right? So before you ever place a trade, it's very important to understand where you are within a range. So this is where that range starts because this is that high. This is where the range ends because, this is that low. Right here, you're in the middle, right? If you want to buy, you want to wait for price to come lower to find support to then buy and go higher. If you want to sell, you want to sell within these highs, right? That's the gist of the market, right? You want to sell high, buy low. So coming into a marketplace here, we took note of a couple levels. We took note of these bearish fair value gaps above us, and then we took note of these bullish fair value gaps below us. So this is a bullish fair value gap. This right here is also a bullish fair value gap, as well as this right here is a bullish order block. So this right here is the last stop close candle before this big spike to the upside. So I'm going to take note of this as a bullish order block. Bam, bullish order block right here. And down here is a rejection block. A rejection block is basically when we have like a long wick like this and the bodies are equal. So you can see equal bodies right here, but this wick is much longer than the wick to its right. So this down here is a level of support as well. This is a rejection block. Mark this out like orange. So bam. So we have levels of resistance above us, levels of support below us. If price, right, this is how you created, the daily bias. If price comes down into this first fair value gap, finds a level of support and then breaks higher, right, I can frame along to reach back up above these highs, right, back up into this fair value gap, back up into this next fair value gap, and back up into this gap right here, right? So that's a possible scenario. The next scenario would be if price finds resistance within this bearish fair value gap and we see a break lower, breaking through this first fair value gap, right? Obviously this would be an inversion to frame a short to go down into this next fair value gap, as well as order block and rejection block level. So however you frame a daily bias is not necessarily predicting the marketplace per se, but it's basically creating a picture of what you anticipate to happen. If price finds support here and breaks away from it, then this tells me that price respects this fair value gap and we should anticipate longs to go higher, back up into levels of resistance. If price does not find support here, but instead it breaks through it, it gives me the idea that price is bearish, and off of a pullback, I can frame a short to go into next levels of support, which the next level of support is here, here, and down here. So that's how you kind of create a daily bias is, we marked out our higher time frame points of support, higher time frame points of resistance, and we basically just create an idea for what we anticipate to happen. We give ourselves two scenarios. Either the marketplace can go higher or either the marketplace can go lower. The only way we would frame along is if price were to come into this first fair value gap and break away from it and go higher, or let's say price breaks through this first fair value gap, let's say it comes down here, find support to break away to go higher. Those are the only two scenarios that you should be looking for longs. You're not buying up here, you're not buying up here, you're not buying up here, right? You're waiting for the marketplace to come lower, buy low, sell high. Right, and the only way that you're shorting within the market is, let's say price opens up and goes higher, back within this fair value gap, or even back up here, or even like back up here, and it rejects from it. Basically, it struggles to continue going higher, and then it sees a break away from it. Then you can frame a short to then come back down here. So, you sell high, right? If the market were to open up and go higher, and it hit a ceiling where it cannot continue going higher, and it breaks away from it, that's when you sell. If the market opens up and goes lower, finds a floor that it cannot break through and starts to break away, that's when you buy. So on the 15 minutes time frame, we marked out all of our levels of liquidity, all of our levels of support and resistance. Now we're waiting for 9:30 open up and see what happens. So 9:30 is about to open up here, and we can clearly see that the market did open up right there. It opened up and it initially went higher. So we can take note of this high right here, right, as a potential point of liquidity, possibly, right? But we have to take note, even though the marketplace is pushing higher, because I know a lot of people probably doing a long tier anticipating a breakout. Even though the marketplace is pushing higher, you have to understand that we just saw a massive rally take place, as well as we are within levels of resistance. Does it make sense to take a buy when the market is already going higher and you're within resistance? It doesn't necessarily make sense when you really think about it, don't it? It wouldn't make sense to buy up here knowing that we're all the way back above these highs, as well as there's resistance here, and resistance here. So instead, what you do is you sit on your hands, you be patient. You understand that you're approaching a level of resistance. This is a level that price could possibly struggle within. So I'm not going to take a buy here, but I'm also not going to take a short here either, right? The reason why you're not taking a short here either is because you haven't gotten the right confirmation, right? You haven't gotten a break of structure lower to indicate that price is going to reverse just yet. So, you can't just, get ahead of the market and, anticipate it to go lower, just because it's approaching resistance, right? You have to wait for price to reach that resistance and then make an effort to break away from it. That's when you can confirm the short. So this is where you exercise that patience. And right here, just being patient right here, and bam. So at this point, when the market basically opened up right here, and then you can kind of see this drop to the downside, basically breaking back below this last up close candle, right? This right here was pretty quick, right? Basically, as price broke back below this last up close candle, I was basically able to frame a short right here, right? Putting my stop loss back above this high point. So it was pretty simple, right? The market opened up, and it rallied higher, but we have to understand that we're still within this bearish value gap. The market opened up, it initially rallied higher, but we're within this resistance level. And once price kind of reached back over this high, it hit a ceiling to where it could no longer continue going higher. And the moment that this next 15-minute candlestick opens up and it sees a big drop to the downside, I took a short here. And it basically made sense, right? We're at an extreme high point, right? We're approaching levels of resistance, right? The market initially made an effort to come into this fair value gap. It's seen this drop. It made an effort to come to that same area again, but you can see that it still cannot break through it, right? What you want to look for is a ceiling where price reaches a level to where it goes higher, sees a drop lower, goes higher again, and then it sees a drop lower. It basically tells you that price cannot break through this level. So if price cannot break through this level, what does it have to do? It has to come lower. It has to come lower to gather liquidity to then break through it. That's how the market operates. Think of it like ceilings. So this is a ceiling that is strong to break. It cannot break through this level. So what it has to do is it has to come lower to gather liquidity, and then with the new liquidity that it gains, if it comes back up here again, then it has the strength to break through it. So you can see here, fair value gap right here, came into it once, rejected from it, came into it again, cannot break through it, rejected from it. As price breaks through this last up close candle right here, right when this was forming, it was a really big drop where it just opened up and just dropped lower. I was able to frame the short here, and as price broke back below this last down close candle, not last down close candle, but this low right here, I was basically able to scale into my position and just throw my stop loss just back below this high point right here. So I was able to scale into my position right there, and then I was able to let me move this here, and I was reaching back below lower prices for around 20 points. So right here. So I like to aim for 20 points every single time, which was basically the low of this fair value gap that I mentioned. So 20 points right there, and this was the trade idea. So that first sell was off of obviously the ceiling that price could not break above this fair value gap, and as price breaks back below this last up close candle, that was the first short, And as we get that momentum where price continues to break lower, I was able to scale into my position. It was another 10 contracts. So initially 5 and then 10 right here. So 15 micros all total, reaching all the way down here 20 points for 1,500 bucks. And that was the train day. And obviously you can see right here, price, right, was within this resistance level, cannot break through it, breaks lower. Now it's back within this bullish reverse gap and bullish order block. So at this point, right, this is a level of support. So it does not make sense to sell down here because you're selling within support as well as you're selling at the lows. It does not make sense to sell down here. And you can clearly see what happens. Price finds support right there. And then we see higher prices going where? It reaches back up into this high right here, reaches back up into this fair value gap right here, reaches back up into this gap right here, and it reaches back up into all the way on the day time frame, all the way back up into that daily gap that we mentioned. So pretty simple, easy to understand, really great trade breakdown for the day. Yeah, really great trade breakdown for a day. I hope you guys learned a lot from this. I'll be back at it tomorrow with the team, trading live every single morning, Monday through Friday.